Hi, everyone. Thanks for joining in. Welcome back to Wall Street Silver. Joining us today is Lawrence Lepard. He is an investment manager, sound money advocate, and a gold stock fund manager. Welcome back, Lawrence.
It's been too long. How are you?
Yeah, really good. It's an absolute pleasure to have you back on Wall Street Silver. So, Lawrence, the Fed watch tool on interest rates is predicting another 25 basis point rate hike. There's an 85% chance in March, they're saying, and after that in May, they're predicting no change. Are we in the final stages, Lawrence? What's your take?
Yeah, it kind of feels that way. I mean, I think I think what he's realized is I was actually shocked by the by his press conference a few days ago. He was incredibly dovish to my way of seeing it. And I think he knows he has to be, because if he continued with the rapid increases, something was going to break. And so in my opinion, this is kind of a soft pivot, which will turn into a more formal pivot. There may be one more increase. And he left himself a lot of wiggle room. And like always, he talked out of both sides of his mouth. He said he's going to completely solve the inflation problem and get it down to 2%. But then he also indicated that, it might be solved already. So, it was it was kind of classic double talk from the Fed. But I think as a practical matter, they are aware of the risks and the problems associated with taking rates much higher than 5%. And so I think we may have seen the last one. We may have one more to go. But in either case, if you look at the Eurodollar futures and all the other markets, the markets are kind of saying, hey, they're probably done. And if that's the case, then we've got a low cost, or we're going to, if the price of money isn't getting higher, it can only stay flat or get lower. And the reaction to that, I think, is going to be positive for all of the kind of things that we own. So the market is calling the bluff. The market is saying that he will get some better inflation numbers and that the economy will start to deteriorate. And the one thing we've seen with these guys for sure is that they very quickly move to whatever the major problem is. Well, they're always late to the issue, but once they get to the issue, then they quickly move. And I think the market is saying, we think that conditions will get worse in the balance of the year. And therefore, Fed, we think you guys are going to be forced to cut. Even though he says don't expect to cut, I think that's all part of his talking tough on inflation, trying to jawbone it lower. But imagine we get some good inflation prints, which seems possible and likely in the next few months. And then imagine we get some bad economic news in terms of whether it be jobs or just GDP or anything. And I think you can pretty easily see how the market is kind of calling his bluff and saying, we think you're going to have to cut, Mr. Chairman, and that's what the market's saying. And I tend to go with the market on this one. I think they're right.
Now, Lawrence, moving on to gold prices, you're looking at the gold charts. What is that telling you? What are you seeing here?
Well, so yeah, I find this fascinating, right? So notice also that October was the low in gold, and that was when the dollar really started sliding. One of the things that's not been talked about at all by anybody is just how much the dollar has come in the last 3-4 months. And I think it's really remarkable and notable. And that's part of what's put the fire underneath gold. They're not always inversely correlated, but they can be in many times. And so to me, the gold chart is smelling out the fact that they can't continue to be tough for very long. And that the pivot, I call it kind of a slow, soft pivot, which is what they're going through right now, that pivot's going to increase over time. And so the gold chart has smelled it. And it, by the way, this happened in 2019, well before, and with a prior Powell pivot, and it happened even before COVID hit, gold sniffed it out first. So I think there's a lot of information in the fact that the gold chart has been strong, which is not to say it couldn't easily correct back to 1825 or something. Look at how far it's come. In October, we were at 1650. We're now at 1913. That's a hell of a run. So, we have to all look at that and go, okay, that's great. But, maybe we get a little bit of choppiness here. But having said that, I think it's really telling us something. And yeah, you go to silver, please, because what you'll see there is that's even been more interesting. And that to me, as a technical guy looking at that, that's a flag. And flags tend to fly at half mast. So silver kind of went from 19 at the bottom, call it 1850, 1819 in the bottom, up to 24. So that's a $5 run. So when it breaks out of that 24.50 high on this particular thing, silver is going to squirt up to 29. And when that happens, all the Wall Street silver stocks are going to go just bananas, and the stuff in my portfolio is going to go bananas. So look, I think these things are coming because I think the Fed is in a box that they cannot get themselves out of. And, you know, as we've seen, M2 growth has gone negative for the first time in a long, long time. And that just can't continue. In a system that's as leveraged as our system is, if M2 does not grow, everything will implode. And I think the Fed is slowly becoming aware of that. And what they're going to do is they're going to jawbone it. They're going to say inflation is headed to 2%. It's not quite there yet, but it's headed there. And of course, this will be a mistake. Inflation's not going to 2%, but I think they'll view it as it's a lesser mistake to keep the economy going and try and prevent a deep recession than it is to let inflation run a little bit hot. And you even saw that, you know, there was some Fed chatter, you know, last 6 months, a lot of people outside the Fed saying, well, perhaps we should amend the inflation target a little bit, you know, maybe 2's right, not the right number. Maybe we can live with 3 or 4, you know, to keep the economy going. So, you know, my view is that, you know, the 2 years of hell that those of us who are in the gold and silver space have endured is kind of slowly but surely coming to an end. I'm not prepared to declare it's absolutely totally ended. I mean, I think we could get another gut check here, but I do feel like, you know, look at the break of that downtrend line. I do feel like it's ended, and therefore I think we're gonna enjoy. I think by the end of 2023, these numbers are all going to be significantly higher, particularly actually for the stocks. I mean, the stocks have been kind of undervalued, you know, deeply undervalued.
What about the DXY? How does it relate to all of this? What's your opinion?
Well, my opinion is that look at how weak the DXY has been since October, which is also when, you know, Yellen and others talked about their concerns about the Treasury market and the continuity in the Treasury market. I think there's been, you know, amongst all central banks and perhaps all governments, a concerted effort to weaken the dollar, you know, in an effort to ease financial conditions, because the strong dollar was kind of a wrecking ball, and they could see that and they knew that. And to be honest with you, I'm not smart enough to know how they did it. I don't fully understand the plumbing. It kind of happened. I think it also might have coincided with kind of the Saudis having Z come over and talk about creating the petro yuan, which you know, Zoltan has talked about so eloquently in his letters. And so I think, you know, in the dollar in euro and Japan and Japanese yen terms has been sliding, and that's the other thing. I mean, part of this is very explainable because for a long time, the euro and, you know, the central bank, European Central Bank and the Japanese Central Bank were kind of pinned at 0. And as we saw, the Japanese Central Bank just increased their 10-year target up to 50 basis points from 25. And the ECB has been raising rates as well. So, you know, all these guys kind of get together and they coordinate, I think, what they feel is the path that will keep us closest to the center of the road. You know, the two extremes are, you know, massive deflation, a big downturn, and the flip of that is the massive inflation that we had when money supply grew 40% in 2 years. And they're just trying to keep us in the middle. But I think they've got to be in the middle with a bias toward printing money and monetary growth because of all the leverage. And so what my opinion is that gold and silver smell this, and that's why they've started to move. And, you know, I'm probably 90% invested in my fund. I'm holding back 10% cash to anticipate the possibility to get one more correction. I don't think we're going back down to, you know, on silver, we're not going back down to 20. You know, on gold, we're not going back
hopefully
down
not. Hopefully not.
We're not going back down to 1950, 1650 on gold. But, you know, could silver trade down to 22? Sure, easily. You know, could gold come back into 1850, 1800? Yeah, it could. And at that point, you know, I would view that as a buying opportunity. And you know, but I think that, you know, 6 months, a year from now, you know, the market will have told us that inflation's not transitory, but the Fed is trapped enough that they can't raise rates high enough to kill it. I mean, recall that Volcker had to take rates 20% to kill it. And we've only gone to 4.755. You know, yeah, there's the gold chart. I mean, could gold come back to 1825? Yeah, it could. I don't think it goes below that. I don't think it, you know, I think it's just you know, it kind of broke out. There's a lot of support, a lot of resistance right around 1825. So, you know, look, it's the thing, we can't watch this stuff every day. We can't know with absolute certainty what's going to happen when. I mean, you know, what I focus on is finding really good companies I like, companies I believe in the management team, companies I think are fairly valued, that I'm quite confident will do well, even if the prices stay right about here. And then they'll do spectacularly if, as I anticipate, I mean, I believe gold will end this year somewhere in the 23, 24, 2500 area. and I believe silver will end this year somewhere in the 30s, perhaps higher. And if those things occur, the companies that mine this stuff, they're going to be just making a ton of money. So
Yeah, where are you putting your money right now, Lawrence? Like, is it silver,
yeah, we
gold,
talked
any
earlier.
producers?
Yeah, producers. I mean, I probably my favorite sweet spot is what I call the growing producers, and these are companies that have a mine or two that are operating. They're getting bigger, but they're growing that production, and they're also drilling to find and expand the reserve. So Silver X, which I think is an outstanding company, doing a very good job. And then the other one is and is corrected nicely here back into the 35-cent range off its big run earlier this year. And then the other one is Guanajuato Silver. I like the management team a lot. James Anderson runs it, but more importantly, he's got two Mexican gentlemen who are his mine managers and the builders of it. And they, one of them, Hernan, basically built First Majestic for Keith. He was the COO there for many, many, many years. And he kind of came out of retirement to come back and join Guanajuato. And what James has been able to do here is he's bought some assets very, very cheaply. He bought the Great Panther assets in the Guanajuato area that were on the books at $80 million. He bought it for $15 million. And so he's now got basically, 3 performing mills and 4 performing mines. And he's ramping his production very rapidly. He's kind of running at a 3 million ounce a year rate. He expects to exit 2023 at a 6 million ounce per year rate. And the market cap of the company is in like the 110 million US area. And at $30 silver, this thing, it's going to make just so much money. And so to me, there's a lot of upside in this story. So Silver X, similar kind of story, rampant growth, some great properties, very smart CEO, owns a huge block of the stock. So he's thinking like a shareholder, not like an employee. And, he's got a very interesting acquisition that we can't discuss that he's working on, which if it comes to fruition could be pretty attractive. And so the mining business is a tough business. And sadly, even the best companies in the world, sometimes things go wrong. So it's very important to have a lot of diversity. And I tend to be in kind of 3 buckets. I have my producer bucket, maybe that's a third, with a few big ones that don't have as much upside. Like Hecla's not going to do a 5-bagger, but Guanajuato could. And then, then I also lean towards some development stories, like Silvercrest was a recent development story, is now at commercial production. And then I have some drill stories. I mean, a favorite drill story, I think Silver Tiger, they just hit an amazing new piece to the deposit they're working on. I think it's very large. So, you got to be diversified across a number of different names. I also like Outcrop Gold and Silver. They have an amazing deposit, still deeply undervalued. Eric Sprott's a huge shareholder there, and I love the CEO of that company. So, there are a lot of opportunities out there, and you got to spread your bets around, because even as good as each of these names is, as we've all seen, some of them, sometimes things just don't go right. So it's a problem.
So Lawrence, we want to thank you so much for coming down to Wall Street Silver, and hopefully in the next 2-3 months we see gold and silver skyrocket.
I think we will. I mean, next 2-3 months, a little harder to see. Boy, if we're not much higher by end of the year, I'll be really surprised. I think
I'll be pissed.
I think we're in the right zip code here, and I'm pretty sure 2023 is going to be a whole lot better than 2022. Nice to see you again. Take care.
Take care.